Welcome, everybody. This is The Bullish Investor, and today I have the honor to interview Amit. I'm not going to even try to say your last name. Thank you so much for accepting this interview. If you guys like the content, as usual, click the subscribe button, and I'm going to grill Amit about his investment in Palantir and his investment philosophy, and we're going to save the best for last. And let's start off with some questions about his YouTube. Are you still with us, Amit?
Yep, I'm here.
Good. You went black and white on me.
I'm black and white. Hold on, let me see. That's that's so weird. It happened last time once. This happened. Okay, let me see. Okay, back to normal.
Yeah, back to normal. So I'm really impressed with your YouTube hustle, because I'm also someone who has a company on the side. And as I understand, you have a startup. And besides the startup, you also have YouTube, and you're posting 2-3 videos a day, which is a full-time job in itself. And I don't know how you have time over to do other things. So when did you start YouTube? What is your plan with it? And are you going to quit YouTube and go over to the startup, or are you going to try to do them both at the same time?
So it's a good question. Thank you for having me on the podcast as well. I really appreciate being here. With YouTube, I see it as top of the funnel brand awareness to get people to know about who you are in video format. So the way I think about YouTube is it is a platform that allows people to actually access your content in a video format. And it's very intimate, because when people are seeing you and they're making eye connection with you, they're developing a relationship with you. So for example, I do a morning market live stream every day around 9:20 to 10 a.m. in the morning Eastern time. And about 250 people have been showing up for the past couple of weeks live, and it's like those 250 people, they actually care about my thoughts. They care about my analysis. And I think that only is happening because of the power of video and getting them to like feel some type of emotional connection. So I feel like YouTube is a phenomenal platform to be able to access discovery towards new audiences. I started YouTube back in like 2009. I was doing like stupid little tech reviews and stuff like that. I always thought I would become a YouTuber because I had started when YouTube just came out, and I was always I've been binging rabbit holes on YouTube literally for the past 15 years. I mean, YouTube has been my drug for a very long time. So like whenever you ask me, is Netflix versus YouTube, it's like YouTube 1000% of the way. I'm so in love with the creator economy and what people are able to create. So in 2021, I launched my startup and I started making some videos on YouTube, and they weren't getting any traction, weren't doing well. And that's when I realized, wait a second, YouTube is an amazing ecosystem to access millions and millions of people and their attention and their eyeballs. But you've got to know how to play the game of YouTube, because the only way YouTube succeeds is if there is a game. And when I mean game, I mean algorithm that connects you with an audience. Because otherwise you're just posting something on YouTube. YouTube doesn't know what to do with your video. YouTube's like, what do we do with this? Where do we show it to? Who cares about this content? And so that is the $30 billion reason YouTube is so successful, is because they're able to take your videos and curate them in a meaningful way. And so November 2021, from February to November, I was kind of failing at YouTube. November 2021, I decided to pick a little bit more of a niche in the stocks, investing, and finance space, go deeper into that. I realized, oh, here's how you work with the algorithm. And then you can start experimenting and talk about some other stuff so that people can care about you. So in terms of the future of YouTube, I'm not leaving. I plan to start a couple more channels actually in relationship to the startup. To me, I think YouTube complements the startup because it gets people to care about, multiple facets of you. And the growth is unlimited. I mean, look at Mr. Beast. This guy gets like 35,000 subscribers a day. His 90 million subscribers. There is unlimited growth potential on YouTube. You just got to be willing to hustle and keep going for it.
It's crazy. What are your future channels going to be about? What is it that you're thinking?
Well, part of the story of building a startup, I want to document that story, kind of more like a Gary Vee type of channel, motivation, documenting the journey, showing vlogs of the day-to-day life of running a startup. I was hesitating to put it on my current channel. But I think my current channel is a little bit too niche for that. I mean, there's going to be some part, like I'm going to be live streaming like 10 hours a day when I go all in on the startup. So like the current channel is going to see the whole day, like literally 10 hours a day of what we're doing. So it's going to be fun, but I think there should be a separate channel with that works within a separate algorithm to rank for other keywords on YouTube, because YouTube is a search engine. So yeah, it's going to be channels around basically building the startup.
Nice. And what does your startup do? I know I asked this from you on Twitter and you answered. As far as I understand, it's like audio for YouTube videos.
Yeah. In general, what we are trying to build is a search engine for audio. So the way I see it is that I think there's a massive market opportunity for audio content to be searchable, discoverable, and recommended at scale. So if you think about what YouTube did, it took the world's video, it centralized it, and then it actually made it consumable for the masses in order for them to be able to find and discover video content that's meaningful. I think that hasn't been done for audio yet. And as a result of that, the name of the startup is called Audea, AUDEA.io. We're currently raising some capital right now from angel investors and venture capitalists in our pre-seed round of financing. And the goal is, can we get the world's real estate agents and poets and comedians and thought leaders and consultants and political, like, can we get all the entire world's content creators that use audio as a method of distribution to actually be able to post their content on our platform for us to be able to give them distribution and discovery at scale? Because if you know anything about the audio space, discovery of audio is one of the hardest things that exists right now, especially as someone who, you probably are in the podcasting world. To get Spotify or Apple or any of the other podcasting apps to recommend your content on a home feed is damn near impossible, given the structural problems with those businesses. So if we could create what YouTube has created for video for audio, then I think there's a massive opportunity there, and it'll be exciting to build in the creator economy space.
Okay. Is it like that if I'm creating a video and I need like a cat sound that I can search, like cat sounds, or is it more like for music that, let's say I want to listen to Taylor Swift, and then you go like, okay, give me music like Taylor Swift that is not necessarily, or what is like the use case? Or yeah,
it's more so you can search anything and anything can come up. So it maybe Taylor Swift is a possibility, maybe cat sounds are a possibility. But if I want to have 5 ways to save on my taxes in 2022, where would you search that? You would either go to Google and find an article, YouTube to find a video. Most people are not going to Spotify and typing in 5 ways to save on my taxes 2022. Yeah, exactly. That's just not happening, right? So when I think of Audio, I think of it not even as a podcast platform. I think of it as an audio idea. Literally anything you can come up with. Like what YouTube says, like, we're a video platform. Any video person in the world can upload a YouTube video. I want it to be any audio creator in the world can upload an audio idea on the platform. And within that, there's going to be many niches. There's going to be financial audio, right? There's going to be music audio. There's going to be real estate. There's going to be so many different varieties of niches if we hit scale that audio could get to. And that could just be a recommendation engine for content. So it's not even about what you want to search. It's about when you log on the app every day, what audio content can we put in front of you that is meaningful enough for you to click on? And then can we keep your attention by getting you to consume that audio content and getting to discover all the different audio creators of the world that exist? And I think if we do that, then there's a big chance to capitalize on audio.
Interesting. Do you have an MVP, something that one can go and you have?
Yeah, I mean, launched July 2021. We launched the app July, so it's been almost a year, and we have 1,800 users. People have posted over 9,000 times on the product. People have searched over 15,000 times. So it's more than an MVP. I mean, like, we've launched it. Now, it was pretty crappy a year ago. So we've done a lot of reiterating and coding and going back and forth. But now we're at the point where we're raising venture capital because it's time to scale. We don't really have to do, like, you could always do more development, but the actual building of the product is done. We don't need to raise money to hire engineers to, me and my co-founder are a pretty good team. So the product's done. People have used it. We know there's market demand. You could probably put in the show notes for people to download it so they can check it out. Now it's a question of, can we raise money to like really take it to the next level in terms of marketing and distribution? And that's where we're at right now.
Wow. Okay. And do you feel on the venture market, do you feel a slowdown? Because, you hear that on the stock market, growth stocks are basically dead and that it's seeping into the venture world also. Do you feel this, or is it easy for you to raise capital?
Well, so there's 2 levels to this. We're currently trying to close a venture deal right now. We'll see if that gets done. But from angel investors, the first like 200,000 that we raised were from angels. And that I am seeing a slowdown because those are average people, so 5K, 10K checks. It's okay in a bull market. It's like, all right, in a bear market, it's like that 5K, 10K really matters. So I have seen a slowdown from that perspective. But in general, you go to people that have money, you go to people that are financially responsible, that are willing to take some risks, you're going to be able to get them to invest as long as you can convince them. So from that perspective, I think you just got to find the right people to give money. In the venture world, on the seed and pre-seed stage, things haven't changed that much. Growth stage, like if you already raised $30 million and you're trying to raise the next 50 million, you might only end up raising 20 million. Like that's where valuations are getting compressed. But in the pre-seed stage, like the venture capitalists are taking a bet on the founder and the total addressable market, the idea, right? And hopefully the product is good. So at that point, if you're trying to raise 500 to $1 million, either it's the idea is good and they're going to get funded or it's not, but it's not like the market's going to stop.
Cool. Very interesting. I'm going to definitely check out the app and maybe we'll be uploading on it also in audio format. We see.
I love it.
All right. So we go to the next one, which is investing. So I want to know, what is your investment philosophy? Do you have other investments than stocks? Do you invest in real estate? Do you invest in yourself? Yeah, that's the first question.
Yeah. So, I mean, like I have my investments in the public markets, pretty much investing in myself because I don't have any private investments because I'm not like angel investing. I'm trying to spend the next 8 years of my life building a pretty big company in terms of my startup. So a lot of the investments have been in myself. I recently just quit my job to go all in on the startup. So it's a pretty big thing to do in the middle of a recession. But, nonetheless, I think we can pull it off. So, yeah, I mean, I have about like 60 grand in the public markets. Right now, it's like 20 grand because of what's gone on. And then it's just investing in myself. That's pretty much it.
All right. Is all of the 60 grand in Palantir?
So it's within two positions. One is a biotech. It's called Purple Biotech, PPBT. That's the ticker symbol. And then about 70% of it is in Palantir. It's a really stupid portfolio, to be honest. It's not a smart. No one should copy this portfolio. It's fucking dumb. It's a biotech and Palantir, but like, you know, that's where my money is right now.
Yeah, I mean, it's funny. My percent is 100% Palantir, but it's because like I'm generating more money and then I'm planning to send more money to the stock market. So don't.
You have no other positions other than Palantir?
No.
Wow.
Because I have a portfolio with my company and then I have a portfolio with my dad, and both of them used to be $50,000. So like together it's 100,000. I think our cost basis on Palantir is around 990 or something like this. So
that's really good.
So bad. I feel I got lucky because, you know, I was watching Tom Nash and I was watching you, and then you guys kept pushing Palantir. And then as the stock was going lower and lower and lower, and you know, then the enthusiasm never changed, you know. So when it was around like 10, you know, I was like, fuck, these guys thought that it was a good deal at, you know, 22. So I have to look at this stock. And I'm really excited about the stock. And yeah, I mean, it sucks because I think a lot of people got into it. I did this. Yeah, we're in this Palantir group chat together, in this Facebook group. And somebody did this survey of, you know, what's the people's cost basis on Palantir. And like 70% was around $20 to $16 or something. So that's quite under the water.
Right. It sucks that we got in so early, I guess, in terms of but like no one expected the entire market to crash. No. So there was a good deal at 25. Good deal now.
Yeah, and I mean, I don't think that it's Palantir, because I saw, you know, many YouTubers who got very upset about, you know, Palantir shareholder letter and, you know, like how they reacted. And are you still with us?
Yeah, I'm here.
Okay. But, you know, like Palantir has been falling the same as many other stocks. And what I find particularly funny is that Palantir has full of, you know, tailwinds, like the inflation is a tailwind for them. You know, the Russia-Ukraine is a tailwind for them. They're, you know, closing deals left, right, and center, and their stock price is falling. I think it's, if you have a chance to dollar cost average, it's one of these golden Peter Lynch type opportunities, you know?
Yeah, no, I agree. At the end of the day, it's really just a question of just like, if we believe so deeply in what this company can become, and it's fallen so massively just because of the nature of the market, it might be another Amazon situation when it fell in 2001. Now, maybe it doesn't have the crazy growth that maybe Amazon's like, what, 3 trillion, maybe doesn't get there. But if it gets, you know, to a couple $100 billion in market cap, it'll be a nice 10x opportunity. So we will see what happens.
Yeah, exactly. What is your... I'm really curious because, you know, you watch a lot of finance YouTubers, and then some of them, they don't do, I want to say it nicely, but some of them don't do any analysis on what the stock price should be. I don't want to name names, but like there's these 2 guys, and they even say it in their videos that I don't know what they invest on, like feelings, or do you have a DCF, or I mean, not necessarily DCF, but do you have a very good idea of what the stock should be worth, and do you have a price target, or are you more into like you see the future with this company and the current stock price doesn't matter because they're going to between 10 to 100x from now, and then it really doesn't matter where you're coming from?
Yeah, I would lean towards the latter, but I do look at the numbers before I invest of like anything and try to like get a good grasp on it. So like, obviously, if you believe in the growth story, you believe in the big picture, you believe in the fundamentals of just like how the company can attack into different verticals, which I think Palantir can do very nicely, then like, it doesn't matter what your cost base is, like 10, 20, 30, like it really doesn't matter the next 10, 15 years. But the numbers always help to give a better analysis. So in the DCF that I've done, if you take a 35% year-over-year growth with 36% adjusted operating margins, Palantir is $263 in 2030, assuming about 3% dilution. So with just those numbers alone, I'm like, okay. So their management is saying they're going to grow 30% until 2025. And that's before I think they've hit their inflection. And their real inflection is like, you know, does the Russia-Ukraine situation... Go ahead.
By the way, I just rewatched the video when management said this, and it's actually, the video was made in end of 2021, and they say in the next 5 years. So it's actually all the way out to like almost 2027, but for sure 2026.
Right. And so like over the next 5 years, then if we think we can get to that 30% growth, they've got to get the margins to be a little bit better than 26 or 27%. And that, to me, if they get rid of stock-based compensation, which is starting to normalize, it went down about 26% last quarter, then I think it's on a good trend. They have to get GAAP profitable. They were 14% last quarter. They're negative 9%. So I think within the next 3 quarters, they're going to get close to breaking even. You know, if they didn't have stock-based comp, they would have made $500 million of profit last year on $1.5 billion of revenue. So it's like, then you have to ask yourself, well, why are they doing stock-based compensation? Then that gets you into a rabbit hole of like, oh, so they're building in these certain ways and they kind of have to have like, so you start to really understand a lot about the company. And I think if they're able to hit that growth inflection, if they only have like 400 clients right now, like what happens when they have 4,000 clients and they're actually the most important technology company in the world? I mean, there's a really good shot that it turns out. We could all be wrong in the next 5-6 years, but there's a good shot we could all be right. And I think that's the risk to invest.
Yeah, it's so funny.
I think on those fundamentals, there's a chance.
Yeah. It's so funny because I have this philosophy that, you know, like you miss 100% of the shots that you don't take. And I feel that, you know, when you look at Palantir, like I have looked at a lot of companies on my channel, and, you know, Palantir is the one that is like, it passes through everything. Like, because, you know, for example, I like Shopify, but for me, it's like still too expensive compared to, you know, like what they can become. Or I love Tesla, but I feel there's so much, you know, short-term risk, and there's, you know, and Palantir is the only one where I conceive of risks, but there is nothing like obvious on the horizon that where they can, you know, mess up on. And then I'm like, okay, if I don't take the shot on this company, then when do you ever take shots, you know?
That is a great point. I said this in one of my first videos I made about Palantir a while back, which was in November 2021, that I missed out on many growth stocks in 2017, 2018. Shopify, ironically, was one of the growth stocks. I was starting a Shopify business, like e-commerce store. I wasn't buying the stock, and I lost more in the business. I would have made so much more buying the stock at like 40, 50, 70 bucks. And, you know, it's like Shopify, like if you just saw the growth potential when it was 40, 50 bucks in 2017, you realize they're building a platform for the entire world to build on top of their platform, because Amazon is not friendly to third-party sellers. That's just the honest truth. Yeah. And like, if you realize that, you're like, I should take a bet on these guys. Now, obviously they went crazy at 1,700 and they're back down to reality. But if you bought it at 70 bucks in 2017, you're still a good 5x, 6x on your money right now, based on where they are. And so when you think about something like Palantir, it's like, when do you take the risk, right? You're looking at this company. That's why at $25, I was like, this is fine. This is a fine risk to take. Obviously now it becomes even a better risk to take, but you're looking at them like no debt on their balance sheets. They have 2.3 billion in cash. They're an inflation-proof stock, given the fact that they don't have to borrow a lot of money. They have positive free cash flows, operationally profitable. The management is led by some of the most smartest individuals in the world. They've been building the product for 15 years. When the Ukrainian crisis happened, who do they call on to help in this problem? It was not Snowflake.
This picture with him and, you know, Zelensky, when that picture came out, I mean, for me, it was like my thesis, like it went from speculative to confirmed, you know, because it's so funny when you look on paper to the two armies, you look at, okay, like Russia has almost 10x in everything. And then somehow magically when the invasion started, like they had all these weird problems, like the tanks were running out of fuel. And then you heard on the news that, you know, like the supply trucks were being like smartly targeted by soldiers. And then they were trying anything and everything to like disguise the supply trucks so that they would look like other trucks. And then, you know, then we started getting these interviews with Alex Karp when he was like, are you involved in Ukraine? And he was like, not really answering the question. And when he was in Davos in CNBC, it was so funny. I think he misspoke there because he said, yeah, the Ukrainians, it's incredible what they can do with software and Edge. And then he was going to say Edge AI, or, you know, which is one of their products. And I felt that when that picture came out, it was all confirmed that basically somehow they're able to like real time monitor, you know, the Russian army and, you know, see the strategic weaknesses, and they can do unbelievable damage to a huge army with like no soldiers.
But when that picture came out, it was just like, man, because we were all speculating in the Palantir industry or the Palantir community that like, there's no way they're not working with the Ukrainians on this crisis. If you claim to be the world's most important software company for governments and for protecting Western values and freedoms, and you don't work with Russia and China because you realize how authoritarian those companies can be, then how could you not in this situation be working with them? And the first hint we got was when the UK's government admitted that they're using Palantir for the Ukrainian refugee matching system because the UK was opening up their borders, Poland, Lithuania, to let these, poor refugees in because of what has happened in the invasion. And Palantir was doing the data tracking to be able to make that system effective. So it's like, okay, if they're doing that, what else are they doing? And that's when it led to the speculation, but we didn't get confirmation. And then 3 days ago, the president of Ukraine says this is the only CEO that has visited our war-torn country in the time of crisis to be able to pledge his services 100% with us. And so it lets you know, like, man, these guys are actually doing something. You feel happy as an investor actually putting your money.
Yeah. And it's so funny that on that day, it was a super bull day on the stock market. And like, I think most growth stocks went up like 5% and Palantir was 10% up.
10%, yeah.
Yeah. And then the next day it was falling and it's like not really doing it. I think it's such a funny situation how you have a company where the fundamentals like keep improving and the stock price is, in the ditch with all the other stocks.
Yeah, it's so weird to even think about the stock price now because it's like it was the entire market, right? So we were at the S&P at 380 10 days ago, or like maybe 12 days ago. Now we're at 415. And it's like, that's not normal to me because nothing has gotten better. No. In fact, things have gotten a lot worse. Palantir should not be I think Palantir should be lower than $6 just given the nature of the market. Tesla should definitely not be in the 700. Like things should not be good right now. And like the market's acting like I saw this meme of there's a tornado and there's a guy just mowing his lawn. That's the S&P 500. It's like, well, I don't know. I mean, and maybe I'm being a little bit more bearish here, but it doesn't. And I'm trying to be more bearish because as a younger investor, I'm naturally more optimistic and bullish. And I think sometimes I do need to check myself. And I'm like, nothing's going well right now. Supply chain's not good. Inflation's not good. Maybe inflation peaked, but even if it did peak, 8% inflation is still really bad. Like, and it's not 8%. It's obviously double digits. That's just what the numbers say on the CPI. So it's like, I feel like we should be expecting it to go much lower. We should get a better buying opportunity. But again, if you think that's going to happen, put your money where your mouth is, short it, or maybe sell your stocks and then buy back in. And then no one wants to do that because you're timing the market. So we're in the wild, wild west. I think any of these prices are fine, whether it's at 6, 9, 10, 15. It's going to take another couple of years to figure out if we're going to be right or wrong. So, yeah,
I mean, my logic is 10 is amazing. Below 8 is unbelievable. And I think below 6 is like stealing. And you see, what's so crazy is that when you look at like where the market peaks and where the market bottoms, it's like the peaking didn't happen at the same time. Like, for example, Palantir has been falling since January. I don't remember exactly the stocks, but Tesla since November, Shopify since July. And what is to say that the market is going to also bottom at the same time? So I'm actually not sure that we're going to see, like, I'm super bearish on the market. I'm going to ask your views on the market also, because when, what was it, last week on Monday, when Joe Biden's plan came out and it was something else, I don't remember, but, everything, it was like the Russia-Ukraine war is going to go on for a very long time. And that's not going to make the oil price come down. And then, the handlings on supply chains and the oil price from Biden is to, like switch to green energy and, repair infrastructure. And none of them are immediate handlings. So what this, like basically switching to green energy is like, if you're fast a decade, then you're like light speed, So what this tells me is we're going to have super high inflation for the next foreseeable future, and the Fed is going to have to go super aggressive, really killing the economy. And that is just my opinion, but none of these hurt Palantir. So it's very like, I believe the market is not going to go up, maybe even go lower, but I don't know if we're going to see Palantir back at $6 again. What is your viewpoint on this, on the future?
Yeah, that's the interesting part. It's like we probably shouldn't see Palantir back at $6, just given, the momentum and everything that's been happening. And it's like, could you really sell off a company that's just admitted to solving one of the biggest geopolitical crises of all time? But then again, you never know. It's like, you just never know. I mean, I kind of feel like when JP Diamond, CEO of JP Morgan, was like, look, there's a economic storm coming. There's a hurricane. You should brace for yourself. I don't think this guy was saying, I don't think he was pulling it out of his ass. Like, I don't think he was just saying it to fearmonger. I don't think he's not like Bill Ackman that'll just say something that's politically convenient for him. He says stuff that like he sees through a lot of data. Jamie Dimon, for those who don't know, was hired in 2007 before the market crash. He was on the strategic committee of the Washington group of people that were trying to like prevent bad stuff from happening because they saw it was about to come. And they thought they were going to be able to solve it. I mean, Jamie Dimon was very confident they were going to be able to avert a massive recession. and then it crashed. So I think he's naturally more conservative because he's like, when people think it's not going to happen, it just might end up happening. And I take his words very seriously. So I don't think this 415 run is sustainable. And I think it's natural. Like the S&P was at 478 to start the year. Like after 2 years of the Fed pumping $7 trillion of liquidity, it's absolutely artificial. It's natural for it to go back down and for us to like be in a 30% bear market for a couple of years and then start going back to normal. Like this is a natural part of the economy. And the fact that that's not happening and inflation is this high and supply chains, like it just doesn't make any sense. But again, that's what they said about Tesla at 1200, right? There's like Tesla at 1200 doesn't make any sense, but Tesla stayed at 1200 for a while. So I don't know. I guess we'll see what happens. But I'm like you. I'm very bearish on this market. I do not think that we're gonna rally anytime soon.
Yeah. Question on Tesla. I've done my own. I don't do DCF. It's too advanced for me. I do like a different type of analysis, and Tesla is very funny because it's super cheap for me if it's like even discounting robotaxis and the Tesla bot, but I see a lot of short-term headwinds for them. So it does make it like the price that I got is that if it's below $750, it's like a steal deal. And even if it depends on how much return you're happy with, like even below $1,000, it's a fantastic deal. But they're going to super mega disappoint on this earnings because the Shanghai factory was closed down. Elon is all political now. You don't know what that brings. And if we go into a recession, car companies really don't do well in recession. But on the long-term future, it's like you have Palantir and Tesla, and they're almost matching. Like if Tesla would go below 500, I would be totally buying.
I agree. If Tesla goes below 500, I would finally buy. I have not bought Tesla yet. I had Tesla before the run up, but I sold way too early. So I missed out on all the profits, which sucks because that would have been my first major win in the stock market. But I was too young. I was too naive. I didn't understand I didn't even know what I was investing in when it came to Tesla. Now it just feels like Elon's distracted by all this political nonsense. The Twitter stuff is also really annoying. I think as we saw the news today, he's trying to get out of this deal. He's not trying to buy Twitter because $44 billion is really expensive right now. I think Elon's a visionary. I think he's a leader. I always stick up for Elon. I always stick up for Tesla. I can't buy the stock yet because I'm so down in the market that I can't afford to be wrong again. Like I just cannot afford to be wrong again. And so if I put in a position, I'm going at least 10 grand. Like I don't have a position that's lower than 10 grand. Just personally, I like to have a sizable amount. So if I put 10 grand into Tesla at 730 or 740 and then goes to 480, which is not the S&P gets to 3,400. It's not crazy to assume Tesla goes way below 500. Just like everything would be bad in the market. I don't want to get burned on that position, right? So it's like, I don't know. It's hard for me to buy Tesla, even though I believe in them. And I believe 5 years from now, it's probably a good bet.
You actually brought up a really good point I wanted to ask you about. I realized I was actually trading on the market, like using technical analysis and trading. And I was like, when the market was going very good, I actually outperformed the market. But it takes a lot of time, right? And then now when the market was falling, I was also outperforming the market just on the other side. So I basically gave back all the losses that I like all the gains that I made. And then, I made this table of like how to make $1 million, like that you start from $10,000 and then, you add money to it and then you have an X percentage of gain on it, right? And the two factors that you can control is how much money you're putting in and how much return you're getting on the money, right?
Yes.
And I realized that, many people who think like I'm going to trade stocks and I'm going to get a 30% return on per year because, I watch YouTube videos. They're saying that they're going to be smarter than, Warren Buffett or Peter Lynch because they are not getting these type of returns.
Yes.
And I realized that even for myself, if I invest the time and money creating more income so that instead of like putting 10,000 a year into stock market, I'm putting 50, 60, 100,000 a year into the stock market. And then I'm getting a lower percent. You go so much further. Like it's surprising. And it's so funny that you said this, that you don't dare to put the money there, because it's probably true that if you focus on your startup and your startup actually works out, it will not matter if you invested into Tesla now or not, because your net worth is going to be way more.
That's the funny thing, right? It's like, so if you're finding Tesla in 2012, 2013, 2014, even 2017, 2018, before it hit its crazy growth curve, that's when I understand the necessity to like sell your left liver to like go put more and more money into the market, because you really believe in it. And that's when it's going all in on the conviction. Tesla's had its growth curve. Tesla's $1 trillion company, a little bit less than $1 trillion right now. So to assume that 3x is 5x, you're talking about $3 trillion to $5 trillion. And that's only a 3x. And 3x is phenomenal.
Yeah.
But it's like, if you're going to take that level of risk to just get a 3x when you know it could come crashing down just based on a variety of factors, then it's really hard to justify putting that money into the market. I think Palantir is that next Tesla. I think we found something at $9-10, which has not at all hit its growth curve. Is it a little bit richly valued? Is there a lot of stuff that you might not agree with in terms of stock-based comp? Yes, but like nonetheless, you think you found it. And we can go the next 4 or 5 years dealing with that if we get that growth curve, because then we're all going to be rich. Versus, like a lot of people have said this, if my startup works, like I'm not going to give a shit about buying $10,000 of Tesla. You know, you're going to have a lot more money. You're going to have a lot more purpose in life because you've built something to do something else. So I think the conclusion is, if you find a stock that you heavily believe in and it hasn't hit its growth curve yet, that's when you decide to put in a lot of money. If not, invest in yourself, because as you said, if you make 100 grand a year and you're making 8% on that versus 20 grand and trying to make 20%, like it just having more money with a lower return, which is what the greats Buffett does, you're guaranteed to make more money. But you have to invest in yourself to be able to get that income to even put into the market to have more returns.
Because you see, even if you knew about Tesla in 2012 and you invested $1,000 because you didn't have more money, and now those $1,000 is $50,000. I mean, who cares? I have a family and money goes very fast.
Right.
It's really not a life-changing amount to make 50,000, you know? So,
right.
Yeah, I think a lot of people miss out on this, the power of investing into yourself.
Yeah, you got to build a foundation for yourself. Like people try to get rich off the market. And I think everyone wants to get rich off the market because of what happened in 2021 and GameStop and all this. It's not real. Like the market is fun to talk about, fun to analyze, but like no one's getting rich off of it, especially if you're not playing with billions of dollars, right? Exactly. If you're playing with billion and you make a couple percent, that's a couple $100 million. But like outside of that, if you're a regular retail investor, go build up your own skills, get something. And also it keeps you distracted from the nonsense that goes on the market all day. Like building a startup for me is fun because if I build that, it's like something to like, imagine the market stays flat for the next 4 years. You would have wasted 4 years of your life trying to like understand the flatness of the market, because
which I think is a very real chance that it will stay flat. Yeah. Cool, Amit. Thank you so much for this interview. It was an honor to have you on this channel, and you're welcome back anytime that you want.
Thank you. What is your name, Bullish Investor?
Vince.
Okay, there we go. Vince. That's a good name. I like the name. It fits you.
Thanks. Cool. So yeah, I guess speak to you more on Twitter. We stay in touch. Thank you.
All right. Talk to you later, Vince. Thank you so much.
Yeah, bye.